Today is Sunday, September 28th. It's the weekends right now. The Asian markets are going to open in a few hours. So I'll just go over the trends in the major FX markets these last few weeks, and then I'll take a look at the economic reports coming out next week. So these last 2 weeks, the trends in gold have continued, but are slowing down a little bit. I took profits on my main trade, and then I took a quick intraday trade last week. So starting on the weekly chart here, we see gold is still continuing its bullish move. On the weekly chart, the price is above the Tenkan Sen, Kijun Sen, and everything is above the Kumo. So it's still bullish, but the price is getting a little bit far away from the midpoint lines here. Looking on the daily chart, it looks like the market is hesitating above the just below the $3,800 level. So after last week's Fed decision, the market gradually retraced, but then on Monday this last week had a huge another leg run from after the weekend. And then after Tuesday, that was the main move. And then starting on Tuesday, it has been consolidating again. So I'll just go back to my main trade. I exited all my positions actually before the Fed interest rate decision on September 17th. The reason I did that was because technically the charts were starting to flatten out. We can see the 1 hour, it's already retraced to the Kijun Sen, and then even retraced to the Kumo briefly. So I exited maybe half my positions on Tuesday, Asian session, because I saw this sell-off as Tokyo opened. And then, yeah, I saw this dip, but I was willing to hold overnight. And then I was thinking to sell right before the FOMC interest rate decision. So that ended up working out. The price rebounded to about the same level and then flattened out just a couple hours before the 11 a.m. Pacific time meeting. All right, so yeah, I thought most of the move in gold and FX and treasuries, they made a big move already. So chances are a rate cut is already priced in. The question the market was looking at was the future rate cuts for the rest of this year and perhaps even going into next year. So we see here right at the interest rate decision, initially price spiked, and that's because the bonds sold off. And then we got a huge pushback down to 3,650. So I'm very glad I avoided all of this volatility. Again, the risk to reward was just not there when the market has such a big move accounting for these already. So for the rest of the week after the Fed interest rate decision, not much really happened. Thursday, we hit the lows at 36.32. And then Friday, actually, the New York session was when some of the buyers came back in to push the price up to 3,690, and then it held over the weekend. So I wasn't really involved in this leg up, but it was interesting to see that this would continue. So it continued up until Tuesday. London session opened, and then it's been consolidating again. So zooming out here, we can see this leg is not as big of a move as the previous leg from the end of August, but gold is still maintaining some of its momentum here. And the one trade I did take last week was after seeing gold consolidate back to 37.20. I bought this triangle breakout on Thursday evening. I'll walk through my decision-making process here. So I saw this really tight triangle starting to form after Tuesday. So we can see here the highs are getting lower and then the lows are getting higher like that. That told me, even though there were some people selling to take profits, you can see the lows, it doesn't last very long. So that tells me there are pending market orders. Every time it dips, someone buys it, and then the next market players, they want to try and get this low, but they are willing to pay a little bit more just to get filled. So you can see every time it bounces here, if someone is trying to fill a large order, they might put their pending order at 37.23, 37.30, somewhere in that area. All right, so after Thursday's session, we see another rebound, and it's consolidating here into this triangle. And I bought exactly on Friday's London session open. So I thought it was going to break out of this triangle here. I bought around 1 a.m. Pacific time. And then for the London session, it consolidated, but towards the end, we did get a breakout move as New York opened. And going into this trade, I knew I wasn't going to be holding it for the trends on the 4-hour or daily time frame. It was just going to be a quick intraday, intra-session trade, and I was planning to close it over the weekend, and I didn't want to pay the roll. All right, so yeah, New York session open. I woke up and I saw the price had moved up to 37.80. I was watching it for just a while, and then I ended up closing the trade at 9:15 a.m. Pacific time. So let me hide all these lines. So in the 5-minute chart, the exact place I closed my trade was after I saw these two bearish large candles here, and then I closed it on this doji candle at 37.74. So yeah, it could have gone down right away, but it didn't. So after London closed, some other buyers came in to try and push it past 37.80 again. But yeah, it seems like most of the traders were interested in closing their positions or taking profits before the weekend, as I did. So it ended up closing at 37.60 on Friday afternoon. So in the mid time frames, like the 4-hour chart, gold is still consolidating. We can see the Ichimoku lines, they are turning flat, and the Tenkan-sen and Kijun-sen are almost on top of each other. It can still break out, but it may take a little bit more time. And I was comparing the technicals with the news on Friday when I entered this trade. So on Friday, we had the core PCE price index, personal income, and personal spending reports that were coming out at 5:30 a.m. Pacific time. So I did a little bit of research into the recent history of these reports. For the past 6 months, they've pretty much been in line with the forecast, and not too much surprises here. So I didn't think this would have a big impact on the price action in the markets. So that was not a major news event to me. And the other reason is thinking about the fundamentals here. The US Central Bank, the Fed, they are paying more attention to the labor statistics right now. From the CPI reports and other price reports, those have largely been in line with expectations and approaching the Fed's target of 2%. So combining all of those reports, that tells me that core PC, these kind of price reports are not going to deviate too much. In fact, it's more of the labor numbers that are going to move the markets at this time. So for those macro and technical reasons combined, I felt it pretty safe to buy this setup here on Friday, London Open. But yeah, there's at the same time, even though this technical setup would suggest a breakout, I wasn't too committed to this trade because there's no big news to sustain this move pushing past 3,800. And in terms of stop loss, I took about a 1.5% risk on this trade, setting my stop loss below this triangle at 37.12. So I was looking for a one-to-one move here, and I think the probabilities were more than 50%. So yeah, this was a good trade, but it ended up paying me off at maybe 0.6 to what I risked. Yeah, so in all, I put 3 positions on this 1.5% risk. So half a percent risk on each position. And in total, I gained about 0.9% on this trade. Right, so this is gold, as you can see on the daily chart. If we zoom out, you can get some reference for these 2 legs. This recent leg obviously is not as big as the previous breakout of this 3,400 area. This is dollar gold, but much of the other gold markets against other currencies are quite similar. And on the other side, let me look at the bond market. All right, so I'll start with the 30-year and work my way down. Yeah, so okay, so last week the Fed decision, I think it was September 17th. Yeah, so the Fed lowered interest rates by quarter of a percentage point, and it's really interesting because the Fed is not able to influence the long bonds anymore, or at least it doesn't look like it. So you can see this is the 11 a.m. news release. It went down initially, but I think those could just be algorithmic or pre-programmed trading to react to the news. But yeah, right after we actually closed higher on the day at 4.692%. And then Thursday, we had a big move up, ended up closing at around 4.71, and 30-year interest rates have stayed above 4.7 for the full trading week after. So it's really interesting because people say, you know, rates are should go down if the Fed cuts, but we see the cost to borrow for 30 years has actually been higher. And the same dynamic is happening in the 10-year, in the 5-year, and even in the 2-year. So again, this was Wednesday, September 17th, when the Fed announced the interest rate cut. So we're squarely above that level now, and yeah, we'll see. It may not go down very quickly, but in the short term, for example, this is the 6-month. This is more in line with what the Fed wants to bring down rates gradually. But even so, it's still higher than when the Fed announced their news. It's at 3.86 right now. All right, so here's the main US interest rate, but we have now gone down to, it shows the top range, but I think it's 4 to 4.25%. That's the range the Fed wants to maintain overnight rates. Again, the Fed only sets the overnight interest rate. It does not dictate the other period interest rates. Those are still market driven by how much demand and supply there is for US Treasuries. All right, so yeah, I've been watching the US interest rates and also Japanese interest rates a lot. So Japan announced, I think maybe a day or so after the Fed, that they would maintain interest rates, and there's still a bit of a hawkish tone around the Japanese central bank. They say they may raise rates in the next few months, depending on the macro situation. So unlike the US central bank, the Japanese central bank is actually paying more attention to prices rather than labor. So since Japan is more of an export-driven economy and reliant on imports for certain things, they are more sensitive to prices. Their government is watching the tariff situation very closely, and they want to keep consumer prices, especially around food, relatively low. So for that reason, the Japanese central bank, the BOJ, they are maintaining interest rates even as most other central banks are lowering them. All right, so that is gold. Silver has been moving much more than gold. It's kind of playing catch up. But yeah, there's more volatility. The moves are bigger. I'll just zoom out to the monthly view. But yeah, we're approaching 46, almost 40, $50 here, which was the previous high all the way back in 2011. Yeah, silver, it may not even pause here. It looks like it's moved a lot, but if gold continues, silver can easily blow past $50 and go higher. The market in silver is just not as big as gold. That's why there's more volatility. Copper is not moving too much. It recovered from this huge drop a couple months ago, still hanging out in the sub 5 range. And then Bitcoin. So I'm not trading Bitcoin, but just to look at this market and compare it with the precious metals. Even though the precious metals have had a huge run these last few months, Bitcoin is trading sideways. Still, it's above 100,000, but not really moving very much. In fact, yeah, this last week, 2 weeks, even though the Fed cut, Bitcoin has not shown any strength. So it may consolidate or even go down if the news and the trends reverse here. All right, oil still staying low. I think the US, they are trying to keep oil prices low to stimulate growth here. So not much to see in oil. Other major currencies, most of the trends have paused. We can see the euro is mostly trading flat since July after the huge run earlier this year. I'll just go through all the cross pairs very quickly, but the only one showing strength is euro yen. Same thing for the pound. The pound is also kind of trading sideways. Okay, dollar. So the US dollar, even though it fell a lot, it is consolidating ever since July. So we can see it could be putting in a bottom here. Yeah, it's strong against the CAD. It's rising gradually against the yen. So compare that to what we see in the bonds, right? So the US Treasury market, the rates are going higher, or at least staying high, and that explains why the dollar is still able to maintain some strength here. Even, yeah, USD, Swiss franc, it's at the lows, but not selling off further. So if we get a reversal or a change in the macro picture, the dollar may actually go back up. So how does this work with it lowering interest rates? Well, again, the Fed only lowers the overnight interest rate, but the other terms, those are still controlled by demand and supply factors in the market. All right, so notably, Canadian dollar is weak. That's due to a couple of reasons here. One, oil energy is weak, so that is the main export of the Canadian economy. And also another factor is the tariffs. So even against its close neighbor, the US is maintaining a strong tariff dialogue against exports from that. All right, and then, so yeah, Swiss franc is, I guess, the only major currency showing strength here. Perhaps it is just a contrast with the dollar. People who don't feel safe holding USD right now may be switching and rotating over to Swiss franc. So we see Swiss franc yen, it's broken through 185, 186, but kind of a sluggish breakout, not very a huge breakout. But yeah, I've also been watching this market. If I wanted to sell the yen, I was looking at the Swiss franc to sell it against. But again, the BOJ is maintaining a hawkish stance here. So looking at the interest rates, the Japanese 30-year yield is actually above the yuan 30-year yield. So you can get 3.16% loaning money to the Bank of Japan, and you only get 2.25% loaning to the PBOC. Just an interesting observation there. All right, so yeah, I was actually quite happy with this, call it a bunt trade in gold. I felt I read the macro picture well, managed the risk well, and then exited well also, just for a quick profit. All right, so I don't know if I'll trade for the rest of this month or next month here. So September is coming to an end, and there's only just a couple more months left in this year. So yeah, we'll see. We'll see what other setups and news come out in the next week. Oh yeah, let me check the news for next week. All right, so we have more jobs numbers coming out of the US next week. So we have the JOLTS numbers coming out on Tuesday, September 30th. There's going to be an ISM manufacturing PMI report on Wednesday. And then Friday is going to be another big day with non-farm payrolls, unemployment rates, and the services PMI. So yeah, after the huge miss last time on the reports, I think there was almost 1 million jobs lost, revised down actually. We'll see how September shapes up to be in the non-farm report. Yeah, if it continues to be weak, we may see, you know, an acceleration of the Fed dovishness. So yeah, more to come on that.